Yo, what's up, everybody? I hope you guys are awesome. It's your boy Leon Sepo Mashalani back again with another awesome banger. So today we're going to do a quick recap on gold. So we're gonna be looking at a few things. Number one, what we were talking about on the previous live, and if you already missed the previous live, be sure to check it out on YouTube at Ultronics FX. If you don't understand what I'm saying, just go to my link on the bio. Click the link, it'll take you to my YouTube channel. Just make sure that you are subscribed. Click the notification bell to get notified every single time I make an upload. Like the video, share, comment, let me know what you think so that we can grow this channel to greater heights. So yeah, like I said, today we're talking on gold. So apparently my intro is funny, and now I thought I'm killing my intros, but apparently they are funny. But anyway, yeah, we're gonna talk more about gold, and just make sure that you guys actually understand what I was trying to prove to you. I think it was at the beginning of the week when we went live. So I'm kind of trying to grow the platform by doing these lives here on TikTok, and just by making sure that everything is in accordance, and just making sure that the content is engaging and you can actually learn from it. And so yeah, if you haven't, just be sure that you are subscribed to my YouTube channel so that you can have more in-depth knowledge in terms of what we're going to be talking about as time goes. So for now, I just want to dive a bit deeper with gold. And there's a few things that we're going to talk about on today's live. And just be sure that you double tap the screen there so that the live can be recommended to more people, so that we can reach out to more people. But anyway, so my chat today is a gold. So I believe it was, let me check which day was it. Monday, Tuesday, Wednesday. It was Wednesday when I did the live, right? So I basically did the live on Wednesday, and on Wednesday's live, we're actually talking more on the rejections and how to properly spot your support and resistance levels. And now today, we're actually going to be diving a bit deeper into that and making sure that you actually understand what's happening, and you can utilize all this information to make sure that your trading journey becomes smoother and you avoid making certain mistakes. You get what I'm saying? So on today, we really just need to to make sure that everything is packaged properly and shared on YouTube, so that you can find it there when you need it. So okay, I got a question from Tepi. So how do you know, or how do you spot support and resistance? So actually, if you can go to my YouTube, the previous live, we were actually talking about that, and I actually went in depth on that topic to make sure that you actually understand, because what I was saying on the previous live and the previous episode, I think it's episode 14 on YouTube. Just make sure that you go to my bio now here on TikTok. Click the link there, it'll take you to my YouTube channel. It's the 14th episode. We were actually talking about that, how to spot properly your support and resistance levels. And so that topic, it's properly packaged, and it'll give you more in-depth knowledge in terms of what to look for, especially when identifying your support and resistance levels. Because hence I was saying, and I actually proved the point I was trying to make, that support and resistance is not a result of price that has been testing multiple times. It's actually what you are witnessing in that specific time as multiple tests. Is just an after effect of what actually is happening to one candlestick. So today I want to go back to what we were talking about on Wednesday, right? And I actually did make a bold statement live on TikTok that on on Wednesday gold was gonna buy, and it actually did. And this was actually something that was, that was okay. What's happening? There's a message that popped up on my screen. Your live is not eligible for recommendation as we don't care. So as I was saying that I was actually trying to prove to you guys what I was talking about in terms of, in terms of the support and resistance strategy that I was talking about, right? So let's start on Wednesday, because we already dealt with Monday, last week Friday, then Monday, and into Tuesday. So we're going to take it from Wednesday, then moving into Friday, and actually see what you could have done and or avoid doing certain things in order to be able to grow in the market. So let's start off with Wednesday, right? So on Wednesday, I did mention, because when I was on the live, price was trading somewhere, here. And I did make mention that due to this fair value gap right here, but on the live I did not actually highlight it, but now I just want to start off there and take it one step at a time so that you guys can understand what I'm talking about. So we have a nice fair value gap right here. Let me change this and make it black. Let's make it black. There we go. So once you understand what I was talking about, and once you see what I was talking about, believe me when I tell you, you will not be able to unsee it, because once you see it, it's gonna be literally just what's the word? It's gonna be programmed in your mind for you to be able to always see it, right? You can't unsee it once you see it. Now check this out. So hence I was saying that on Wednesday's trading session, we're going to start on Wednesday's trading session, right? Price opened very nicely and it started trading to the upside. Now remember what I was saying previously, that price will normally target that particular candlestick that we were talking about on the previous live. It will target that candlestick, and it's going to treat its high and its low as the supported resistance level, right? And that's where now you can narrow down what you want to see happen in the market, right? So we already know about your kanakidi in these things, your rejections, right? So these levels actually serve as perfect supported resistance level, and they help you to actually be able to identify whether price is going to break or it's going to reject. They are so accurate, it's unbelievable. Now I'm going to prove to you again what I was saying on Wednesday, right? So price traded from here, it went up. I called this out before it happened. Number two, we have another fair value gap lying right here. And if you follow me on YouTube, you already know that fair value gaps or imbalances are just areas of untested structures. And I proved this also on YouTube. So make sure that you go watch that on YouTube, because here I'm just going to be, diving deeper into the analysis, especially with gold, because I'm a gold trader. So price after it had taken out that high, right? It created a nice rejection from that high, right? Let's mark this out. Can clearly see right there, right? Price traded above that level, but it closed below it. Now remember what I said previously, right? You want to see the following candlestick. The following candlestick will forever be the confirmation candlestick that will tell you what's going to happen with price action, right? So let's take this price action for an example. So as you clearly see right there, price broke above but closed below. It broke above, but it didn't stay above. It closed below. Now this is the important part. Now the following candlestick confirmed that price was going to reject from that high easily. Why? It closed also, it formed and closed below that high, the previous high that was supposed to have been broken for that day, right? And the moment this happened, it was a clear indication, like literally I had my cells already, launched right there the moment I saw this tiny confirmation. Okay, and this on its own was high probability for me to have confidence enough to enter into that trade, right? What was my target? My target was quite simple. My target was this fair value gap right here. This entire fair value gap right here was my target, right? And I knew for a fact that the following day price is gonna trade above this now high of now we are into Wednesday. And Wednesday is when things started to be very interesting, right? Number one, we have what now marked out. Let me delete this. We now have marked our 4-hour candle of interest. Now these candles are not just random candlesticks, and I need you guys to understand and pay very close attention to this. They are not just random candlesticks that are just forming and you just pick it. So I'm gonna dive deeper also, I think tomorrow on Monday, and I'm gonna create a proper PowerPoint so that you guys can actually see what I'm talking about in action. Now, when you are on a bullish week, for an example, the candlestick on the 4-hour that you will choose is supposed to have the high of the day. If you are bullish, if you are bearish, it's supposed to have the low of that particular day, right? So it's not just a random candlestick that's there. So the reason why these candles move in this sequential form is quite simple. Number one, every day when price is about to close, when it's preparing to close, what will happen is it will trade creating the high or the low of the day, and in doing so, the moment it rejects, price will start now trading within the range of that high or low. Okay, and that's where your interest should be. Now that candle is the candle that's carrying your money. Now, as you can see here, the high of the day, which was on Wednesday, was formed. And one would ask, why did I not choose this low? It's because on the 4-hour time frame, remember that we went a bit in depth with this thing on that prior week. So Wednesday. So when you clearly see here, here's the candlestick on Wednesday, right? This is the very same candlestick, that price action we were looking at. So I highlighted that candle into Thursday, right? Highlighted the candle into Thursday as well, right? And now when you go on your lower time frame, right? Your 4-hour, your 1 hour, we go down a bit. Now we are doing a top-down analysis. Here's Wednesday's price action, right? This number 2 was the rejection that gave me more confirmation that price was going to move up from Wednesday, but we are not there, we are here. So when you look at the 1 hour time frame, on Thursday price traded up, right, to take out the high of Wednesday. Okay, it traded higher to take out the high of Wednesday, and in doing so it gave us a confirmation of what was going to happen on Thursday, right? Because now we had a rejection on the 1 hour and the 4-hour, right? And the 4-hour right there, it rejected. It's always just a few confirmations, then you will know what you need to do, right? Go to your 30 minutes again. We are still on Thursday. Here it is again. On Thursday, price seemed to break above, but the following candlestick, you see the importance of what I always tell you guys. The importance of what I always tell you, wait for the following candlestick to confirm whether price broke or it didn't, right? So price broke, but the following candlestick served as a rejection. Now, the moment price closed below the high of Wednesday, this was a very, very strong setup that price was actually going to drop. And it happened so perfectly. Sales already were entered, right? Now remember what I said. Remember what I said last week, that you don't use the lower time frames to confirm breaks, but you use the lower time frames to actually, find your entry points, right? So that's the purpose of why we actually use lower time frames in this instance with this particular trading method or strategy, whatever you want to call it, right? So on the 15-minute, we can clearly see price also rejected, entered into that trading range. And the moment I see something like this happening on my own capacity, I have confidence enough that price most definitely will reject from that level. And remember what I said last week. Last week I said to you that from that entry point, right? This is an early entry, by the way. It's an early entry, and I don't necessarily recommend that you do this before you actually understand what's actually happening, right? And so never mind that. So from that rejection, you can enter there targeting what? The previous range, the previous day range from that 4-hour candlestick. Price will always, once it rejects from support, it will strictly move straight to your resistance. If it rejects from your resistance, it's going straight down to your support and it's going to break it, right? Hence we see right here. So what I normally do and say to people is that I recommend that you enter your trades after, in this case, the support broke. Support broke, but the interesting part is that the candle that broke the support actually formed a fair value gap. And now in that fair value gap, what you want to do is mark out with your Fibonacci level, your Fibonacci tool. Where is this? Just a moment. So once you have that mapped out with your Fibonacci tool, it's actually easier for you to now predict where your entry will be. Oh, I already have this. So from the range of the fib, the levels you'll be looking at will be your 60%, your 70%, your 50%, and that's where you'll be like targeting your entries, right? And then from there, enter the cells targeting what? A minimum, at least a minimum of the full range of the previous candle. That's where your TP should be. And in this case, it would have been right down here if you have entered. Right? So now this is what we are basically going to be looking at and trying to digest so that you guys can actually understand this and see it play out as it happens. All right? Nice. Now, let's delete that. We delete that. Now moving into Friday. So now since ever we are done with Thursday, moving into Friday, it's the same thing with Friday. You map out on Thursday the very same candlestick on the 4-hour time frame, right? The candlestick that created the low of that day is this one, and price started trading within that range, right? Now, this is what we anticipate to happen with gold, right? And hear me and hear me well. Hear ye him. Now, hear me, right? This is what's currently happening now, and gold literally just opened right now. And now we're going to take advantage of this moment to do a live analysis of what's going to happen. And if it plays out according to what I anticipate, then we're going to have a very nice week or day, right? So let's start off with the 4-hour again. We go to the 4-hour. So we already have the level marked from last week, right? And in that instance, the trading range of the 4-hour candlestick of Thursday will now be the trading range of relevance, right? So in that instance, this is what we want to look at. Now, we already have our support and resistance level right here, this trading range. Why? It has not yet been violated. Go watch the video on the previous live. It's on YouTube. You'll find it there. Because this range has not yet been violated, so this one, we don't count it anymore. It has served its purpose. This range and this support and resistance, they have served their purpose. Now we are interested in this particular range, right? This is the range of interest currently, right? And then we can literally just have that play out into today. We can have this play out into today, and how price is gonna react to these two levels right here is gonna determine the entire direction of the market for today, right? For today, it's gonna determine the entire trading range. We're gonna go live again during the day and watch price play out with this as it moves. So two things are either gonna happen, right? Price is gonna trade and break this level, and after it breaks this level, remember the confirmation tactics I gave you to be able to spot a proper break. You go to your 1 hour and your 4 hour candlesticks. You don't want to confirm a break on a lower time frame. You're gonna make big mistakes, right? So be sure that you have your trading a range properly identified, and you can see that, okay, price did break below that level. If price can break below this level and the 1 hour time frame and the 4 hour time frame are confirming this break as a proper break, price is gonna crash. Now, I was telling some people this thing, right, that it doesn't matter where price is gonna go after. What you need to know is, it broke, I've entered, this is where it's going. I gave you how to measure your TPs and your stop losses. You just focus on that. As to what's going to happen after, it's not your baby to nurse. What you need to do is, I've entered, I know it's going down. As to how far, it doesn't matter. That's why I always say that don't try to predict the market. React with the market, move with the flow, move with the trend of the market. Because the moment you try to be a prophet in the market, you're gonna have your own expectations, and those expectations most of the time will not be met. You get what I'm saying? So be sure that you are patient enough. Be patient enough for you to be able to, watch these things play out as time goes. You get what I'm saying? So this is what we are anticipating. I'm anticipating personally. This is what I'm anticipating. If price, as I said, can trade below this level, break it properly, and the 1 hour and the 4 hour time frame confirms those breaks, then believe me, price is gonna crash. But if price can fake out, the moment price can fake out from this level, it's gonna move directly and break this. These are guarantees. Like I'm not even trying to be a guru. I'm not a guru. I'm just sharing with you guys my experience and my expertise and things that I've discovered in the market as I journeyed along. You get what I'm saying? So the moment we have a rejection from this level, mark my words, we're gonna have a bullish day. And what I love about gold is the fact that the moment price moves on Monday, at the beginning of the week, the moment price moves, it moves. Like, it just moves. For the whole week, it's going to be bullish. And then you might see a change in the trend towards your end of the week. You understand what I'm saying? So these are things that you have to pay close attention to, and try to understand that at times trying to force how market is going to react is going to hamper you very negatively, right? And these are the things, so and you try to figure out why you're not profitable. Number one, it's a matter of now patience. It's a waiting game. You get what I'm saying? As much as everyone, likes saying this thing that Forex is not a get rich quick scheme. But you find a lot of impatient traders when they approach the market. Everyone is so impatient. Everyone just wants everything to happen fast. Guys, I'm not even joking. Literally, there'll be times where I'll have to wait hours before I take my setup. Like I'm a day trader, right? I'm on the market every day. I'm a day trader. At times, it takes long for my confirmations to happen, and sometimes I miss them. I won't, like, because I'm a busy gent, right? And now in those gaps, so fumana hore, I missed this. The moment I miss or you miss a trade, don't want to force yourself to enter a trade because you missed it. You'll make big mistakes. You understand what I'm saying? Just like what's happening now. Like, mark my words with what I'm saying. I'm saying that, and guys, this is not financial advice. I forgot to say this disclaimer. Guys, everything said and shared on this channel is not financial advice and should not be taken as financial advice by anyone or any institution at any given point in time. Everything we share on this channel is for educational purposes only and should be considered as educational content. So you can take this content and use it to grow yourself as a person. You get what I'm saying? But whatever I'm doing here is just me sharing my journey with you and how that can actually help you grow as a trader as well. Now, so what we want to see, right? I would love actually to see the same price action we saw on Thursday, whereby we had a nice break, clean break, a proper displacement in price. This creates actually opportunities to enter, like your fair value gaps or your imbalances. In that way, it's like a proper and very meaningful, setup that you can actually utilize. Let's check what happened on Thursday. Again, number one, it was the rejection. Number two, you see these three candlesticks that are lining up there. They form a fair value gap if you shift to your 1 hour time frame, right? Price traded into that, rejected from that. Because remember what I said on one of the episodes on YouTube, that it's very important that when you are identifying a fair value gap, how you then utilize it to work for you is by identifying how price reacts to that fair value gap. Does it reject or does it just move through? These are the biggest determinants of whether price will honor a level or it will just disrespect it. You get what I'm saying? So this is what I would like to see. I would like to see the same price action. Rejection, that's number two. So this rejection, the moment it formed, it was confirmation number two. The price is gonna crash. You understand? Can you spread screen bigger at current price? Yeah, it's a bit small. Okay, is that better? Okay, I think that should solve that problem. Okay, so hence I was saying, all right, so on Wednesday we had a rejection away from the fair value gap that had formed, right? I don't trade order blocks. Like, I always tell people this thing. I don't like strategies that, leave me questioning myself whether I know how to trade or not, because it works sometimes it doesn't work. I don't like such strategies. I like something that I can prove with market structure. Okay, so fair value gaps, order blocks don't really do it for me. I prefer fair value gaps because I can interpret fair value gaps into market structure. So it makes it kind of easier for me to be able to understand and be able to identify proper levels of entry, right? So rejection, we are still in that trading range. It rejected from the top. After rejecting from the top, we wanted to see what displacement away. Number one, first sign of displacement was the rejection. The moment that rejection happened, that's where I entered my trade. For the second time, it was my second entry point because I was really like on point, focused on this setup, right? I'm going to show you proof of these trades, right? So rejection number one, where I entered, entry number one. Entry number two, rejection away from the fair value gap, and it closed outside, right? Outside the range of that fair value gap. Let's refine the fair value gap so that you can see it. Right, it's tiny right there. You see, it seemed two, at the beginning, it seemed like it was gonna break and continue, but what was interesting is price just rejected and closed below the range of that fair value gap, and that was a big confirmation that no, price is actually gonna move to the downside. So that was confirmation number 2. Fair value gap number 1, rejection away from the fair value gap, that's confirmation number 2, pardon me. And that's where you would want to enter your trade with your stop loss above your candle of relevance, of confirmation, which is the rejection, and then price broke. Now, I don't recommend normally I don't recommend that you trade inside the range. So what I normally say to people when I advise them with this form of trading is that wait for price to actually break the range of the support and resistance from the previous day. Because remember, we are taking our entries and the setup is based on the 4-hour candlestick of the previous day when market prices closed. Right? When price action started to stop and halt. Right? That was the candle of relevance, of which in this case is this one. This range, it's on the 4-hour time frame. Right? So, hence I was saying, normally I would advise you to wait. This is not financial advice. I would wait. Okay, guys, I just need to find a way of talking because I'm not a licensed financial advisor. I'm a trader just like you. So I don't want to find myself in trouble with the FSCA saying that I'm giving financial advice. Hey, I don't want trouble. Right? So displacement away from that. So what I would do, because I'm sharing my journey with you, right? I'm sharing my journey with you. So what I will normally do is that I will wait for price to trade outside the range that we have identified from the previous day, right? Number 2, once that has happened, I want to see an imbalance. Thank you, my brother. What I was thinking. Thank you so much. I think that will work. That will work, definitely. So let's go to the 4-hour time frame. So now we have that displacement away from the range, right? It broke outside. And number 1, we have a confirmation that price broke out. It started trading outside. Now, this is where it gets a bit tricky for a lot of people because now they confuse, price action with rejection. Ne? Now, pay close attention to what I'm going to say. This is rejection. Why is it a rejection? Price broke with the first candlestick, then the second candlestick took price back into the trading range. You see what I'm saying right there? So once you identify this, okay, let me get a marker, right? Let me just get a quick marker so that I can be able to draw these lines perfectly so that we can work hand in hand. These tools. I just need that pencil and brush. There we go. So price broke. Let's make that black. There we go. So price broke, right? But it stayed outside, right? Hence I was saying to you guys that the following candlestick is going to be the determinant of what's going to happen after, right? It rejected back into right after the following candlestick. What's important is the first break, the candlestick that follows the candle that broke is going to determine whether price is going to stay outside of the range or it's going to return back into the range. So the difference between what's happening here and what's happening here is that price broke. The following candlestick did not return price back into the trading range. So that's the difference. So this is not a rejection. It couldn't serve as a rejection because a rejection is immediate. It's something that happens literally right after a break. So once you can identify that price broke above the range but returned literally after that break, then you know that we have a rejection. But the moment you see price break and then there are candlesticks that are forming outside of that trading range, be sure that that is not a rejection. it's gonna serve as a pullback. It has formed market structure. I'm gonna take you back here. Life is as simple as market structure: higher highs and higher lows, lower lows and lower highs. You can't be a trader and you don't believe in market structure. That is why you are not profitable in what you're doing. Like, mark my words, there's a reason why you are not profitable in what you're doing. So check me, check it. Price broke. Following candlestick didn't have much momentum. We don't care about that. That's not what we're looking for. What we are looking for is areas of a displacement so that we can find our fair value gap in order to execute trades when price returns back into that area, right? So check this out. We look into the 50-minute time frame, right? We are trying to refine our fair value gap so that we can have small pullbacks in our entries, right? And this is actually one of the mistakes I made when I was trading, I think a month ago. I was impatient, and it caused me to actually lose a lot of money. Like, I lost a lot of money due to impatience. You understand? So I'm trying to get you to avoid those. So check this out. Here's where, at minimum, at best, where you can enter after price tries to pull back is at the range. This is as far as you can go. Like, you don't enter here, you don't enter on this candle, you don't enter on this one because it simply looked like it was pulling back. That's not what you do. You wait for price to go back to the trading range you have highlighted. This is where you now raise your eyes. This is where now you become alert. You understand? So what I'm thinking is that it's very important that after price breaks that range, you want to then go back. You want to watch price. You want to see price go back to test the range. Once the range is tested, then that's when now I think you can enter your trades, right? And in that case, hence I was saying, you take your Fibonacci, you identify your fair value gap, you line it, then you target your 50% to your 60% right there. Almost no fuss, no nothing, right? You enter with your stop loss above this high. TP minimum. Where are these tools, man? Like, these tools just, they are here, right? You measure this range, the range of that candlestick. You measure that, and then you take this, you extend it like net so. This will be your TP1. This will be your TP1. Like, this is what I simply do. Simply in and out. And it works like a charm. It works perfectly. I can't complain about this particular form of trading and how one can actually be scaling and trying to actually, grow your money perfectly in trading, right? So this will be your TP1. Your TP2 will be wherever. Me, I'm out by TP1. Like, I don't even want to lie to you. I'm not a greedy trader. Like, by TP1, I'm done for the day. Like, I've gotten in the market. I saw what I needed to see. The market did what I was expecting. I've made my target. I'm out. As to what's going to happen after I'm out, no longer concerns me. And this is where we fail. And we fail big time because we want to always be in every move that's happening. You get what I'm saying? This is where greed kicks in. This is where now things like, ego deal with you. You get what I'm saying? So we really ought to be patient at times, right? Be very patient. And as soon as that happened, as soon as, this price action was finished, I was already out, guys. Like, I'm not joking. I'm going to show you proof of these setups. I don't do screenshots for such matters, but this is just for documentation purposes and to show that this actually does work. You get what I'm saying? So once this happens, from the range, We got what we wanted to see. It happened perfectly. We got in, we took our trades, we got out. No fuss, no hustle. Get what I'm saying? So moving into Friday, price never. Let's delete that so that everything can be clear. Okay, so moving into Friday, right? Remember, we now highlighted another candlestick that belonged to your 4 hour that belonged to Thursday's trading session, right? So check this out. On Thursday, we highlighted again. Remember, we were on a downtrend. Hence, I said, if you are on a downtrend, that candlestick must have the low of the day. If you are on an uptrend, that candlestick must have the high of the day. That's very important and very crucial because it's going to help you to be able to, size down on the noise. Okay. How do you mark the range? Missed that. Okay, so the range, I actually did a live, I think on Wednesday. I did a live on Wednesday explaining that. So I recorded that episode. It's on my YouTube channel right now. Just click on my go to my bio, click the link. It'll take you straight to my YouTube. It's the last episode 14. So you'll find everything. I went in depth so that you can actually understand this in proper terms, because I did it on PowerPoint, so it's very detailed, unlike now. But just for you to be able to come closer to the topic, let me just run through it real quick. So, first things first, you see my days here are divided, right? You see this device that's here. These are my trading days, right? So let me show you. First things first, when I open my chart in the morning, I click on my 4 hour time frame. That's the first thing I do, right? Let's go to the current price section. 4 hour time frame, and what I do is I look for a specific candlestick, okay, on the 4 hour time frames, but on the previous day, not the current day, the previous day, must be the previous day, toward the end of the trading session. So it's never at the beginning, it's never at the middle, it's always at the end of the trading session for that particular day, right? So what you do is you identify a candlestick that was never broken, right, on the 4 hour. As you can see with this particular one that I highlighted right now, it has the low of Thursday, and price never broke above or below it in the following day, right? It's very crucial. Number one, it must be a candlestick that has the high or the low of the day, depending on the trend. If it's an uptrend, it must have the high of the day. If it's a downtrend, it must have the low of the day. These are very crucial 2 points, because toward the end of the day, for an example, toward the end of the day, let's look at our charts. Toward the end of the day, right here, toward the end of the day, price started consolidating in preparation to close, to start a new day, right? Now, this is what we are looking for. This is what confirms what we want to see, right? This on its own serves as that cherry on top, okay? So now this candlestick's high and low are your support and resistance level for the following day. Now you just treat that as normal support and resistance, right? So you treat it as your normal support and resistance. You don't want to overcomplicate things and end up, locked with too much information and not knowing what to do with it, right? So that's how you basically identify the range. 4 hour time frame from the previous day toward the end of the trading session, right? So make sure that you are with me, because I'm going to be live on a regular. I'm going to be live every day, even literally during the day tomorrow on Monday. I'm going to be live during the day, confirming and trying to show you guys what I was talking about with this analysis right here, the forecast that I'm currently doing, right? It's going to play out exactly how I'm saying. You don't need a signal provider. You don't even need me to come and tell you that, okay, now it's time to buy. Now it's time. You literally don't need that. You just need to be looking at a few things. Number one, that candlestick is it violated or not? Right? Number one, the trading range that you are seeing right now, the moment it breaks, just like the price action that we just did now, the analysis we just did on the price action on Thursday, it's literally what you want to see happen here. You get what I'm saying? So the moment you don't see a displacement in price and price just rejects away from this level, mark my words, price is going to shoot up to come here. It's not even going to return in the middle. It's going to, from here, if it rejects this level, it's coming straight here. I'm so confident in what I'm saying because I've been doing this for so long and it has been working perfectly. And that's what I'm saying. So if price doesn't do that, or it comes now, let's say it trades, where are these markers again? Brush. Let me turn this into one of my favorite tools. Okay. So if now we start seeing price trade and break, but then rejects from this level, the moment it rejects from this level, it's definitely gonna come down and break this one. So what you want to be able to identify is a proper rejection or a proper break. Once you have these two ranges marked, what you want to identify is a proper break or a proper rejection. That's it. Then you enter. We literally just talked about what to do and what to look out here. So hence I was saying, guys, if you missed how to mark the range, it's on my YouTube channel. Just go now on my bio, click the link, it'll take you to my YouTube channel. It's episode 14. It's the latest episode 14. Get what I'm saying? So it's one of the things that once you really get down and actually understand and actually consider, not just only consider, like, guys, what I'm saying to you, I'm giving it to you for free. It took me so long, trial and error, trying to find something that works, and I was scammed, I was lied to. So many things have happened, just like you are going through so many things right now, trying to find what works. We are all here trying to hustle and trying to find what works for us, right? This is what worked for me, and I guarantee you, if you follow what I'm saying exactly how I'm saying it, you will be profitable. Trading is not a get rich quick scheme. It's time we genuinely just stop this ideology that because you're a forex trader, you are putting unnecessary pressure on yourself. That's why you are not growing. It's the unnecessary pressure that you put on yourself because you are chasing a fake lifestyle that you can't even afford because you saw trader so and so, your favorite mentor who did this and did that, and so I want to be like my mentor. Guys, just like doctors, just like accountants, just like mathematicians, just like all these fancy jobs, not everyone who's in that industry is rich. It's the same thing with trading. There's nothing wrong with trading to make a living for yourself. The problem is now starting to create unrealistic expectations that you yourself can't even meet that you're doing. I thank you so much for sharing. Also. Thank you so much.
Yeah. Thank you so much.
Thank you. Guys, you have been lovely. Thank you so much for your time and your attention. This episode is also going to be uploaded on YouTube, episode 15. So be sure that if you missed anything, just go on my YouTube, click the link on my bio on TikTok. It's going to take you directly to my YouTube channel. Just be sure that you are subscribed to the channel. Click the notification bell to make sure that you're notified every single time I make an upload. Like, comment, let me know what you think so that I can better grow this content and so that it works proper for you. Guys, you have been wonderful. Stay blessed. Do good. Shalom.